Hi, this is PR Sundar. Welcome to this special episode where I'm going to talk about the direction of the market for the next few months in our markets. Right now, things are looking very bad. FIIs continue to sell. Markets keep falling. So yesterday in US markets, some jobs data came. The jobs data came very good. So very good news is a bad news for stock market. So US markets came down by 1.5 to 2%. So because of that, the GIFT Nifty indicating opening on Monday morning close to the swing low. The November month, the October first week, the correction started. So that correction lasted about 6-7 weeks. After 7 weeks, it made a low. That low was around 23,270, something like that. So from there, 1,500 point recovered, and now once again it's falling. And on Monday, we are likely to test that November low, right? So a detailed analysis I will give you later. But right now, the picture is not looking really very good. So everything is looking bearish. FIIs continue to sell. I thought, we need some trigger to turn the market around. So I thought when the TCS results came, so I thought this can be a trigger. But what happened? Only the IT stocks recovered Friday. Rest all indices crashed like anything. And in fact, the first sign of crack is happening in mid cap and small cap. So far, until last week, the mid cap and small caps fell less than the large cap. And usually that should be the opposite. When the markets fall, mid cap and small cap should fall more, but this time mid cap and small cap fell less. That's mainly because, retail people keep on pumping in the money to mutual funds. But FII keep on selling. So mostly FIIs sell the large caps, right? The big FIIs, they mostly have positions in large caps. So that is a picture right now. Okay, first let me show you how bad is the picture. Okay, now if you look at this this Excel sheet I downloaded from NSE website, so here what I've taken, this is a sector, and this is yesterday's low, and this is 52-week high. From 52-week high, how much it has fallen? So Nifty Media Index has fallen about 29%. India defense sector fell 25%. Energy 25%. PSU Bank Index 25%. CPSE 23%. Nifty has fallen only about 11 to 12%. But look at many indices. Oil and gas. Oil and gas index, Reliance is the major contributor. So it has fallen more than 20% because we know the Reliance has also fallen about 25%. And commodities, metal, next 50. So you see there are so many indices fell more than 20%. Right. Then auto, realty, FMCG. Now if you come to the lower end, which sectors fell the least? So it is IT sector and pharma sector. So here my advice to the followers is that if you want to invest money in a stock market, you see whether the stock market sentiment is good or bad. If the stock market sentiment is bad, one should invest the money only in defensives. So defensives means IT, pharma and FMCG. When the sentiment is good, it is time to invest in cyclicals. So cyclicals means commodities, means metals, oil and gas, all commodities. Commodities, real estate, auto, banks. So these are all the cyclicals. So definitely now sentiment is very, very bad in the market. So it is time to be in this pharma and IT. In fact, FMCG, though it is a defensive sector, This time it is so unusual. I think I've spoken many times. In the month of October, FMCG index has fallen 10%. Even during coronavirus and Lehman Brothers collapse time, that index did not fall. So usually in a falling market, FMCG used to do well, but this time structurally there seems to be something wrong with FMCG, so that is falling even more. So this is about the sectors. Now come to the individual stocks. So here what I've taken, the Nifty 50 stocks. In the Nifty 50 stocks, this is the name of the stock. This is yesterday's low, the 52-week high. IndusInd Bank has fallen nearly 45%. After falling 40-45% only, Goldman Sachs is coming and downgrading that stock. Then Adani Enterprise, Tata Motors, Hero MotoCorp, Coal India. Look at all these things. So there are so many stocks have fallen more than 30%. Right? But look at all these stocks, they are all like commodities. See, Asian Paint, Coal India, so they're all commodities. Right? Tata Steel, right? And then IndusInd Bank, Tata Motors, Hero Moto, they are all like, cyclicals. So all the stocks that has fallen more than 30%, they are all cyclicals. Right? Then 20 to 30% fall. So these are the stocks. But by right, Britannia should not come. Britannia and Hindustan Unilever should not come here. But this time, as I told you, there is something wrong with the FMCG. Then there are stocks that has fallen 10 to 12%. Then there are stocks that has fallen less than 10%. So approximately 25% of the stocks have fallen more than 30%. 25% of the stocks have fallen between 20 to 30%. 25% of the stocks have fallen 10 to 20%. Only about 25% of the stocks fell less than 10%. Here, the Nifty has fallen about 11.16-12%. But if you look at the stocks that has outperformed the Nifty, right? See, HCL Technology, Infosys, TCS, Tech Mahindra, Wipro, all the IT stocks. So all the IT stocks have outperformed the Nifty. In fact, last year, in the year 2024, the best performing index was IT index. IT index has given 18% return, while the Nifty has given only 8% return. Then if you see some other stocks, for some other individual reasons, like Kotak Bank did not fall, because the Kotak Bank did not rise for the last 5 years also. And then Mahindra and Mahindra. So though Mahindra and Mahindra is a cyclicals, but if you know about Mahindra and Mahindra, you will know that is the best Indian auto company. Like recently they have launched some electric vehicles. Look at the fantastic features at the rise price point. So that technology, they are going, to the next level. I just cannot even believe that it is an Indian company. So much of technological advancement. When they introduced this Mahindra XUV 700, so they introduced the adaptive cruise control. I don't think that any other Indian auto company offering that facility, right? So, Dr. Reddy, Sun Parma, as I told you, they are all like defensives. And Apollo Hospital is also like, is as good as a Parma company only, right? So there are few stocks, Bajaj Finance, Bajaj Finance, it has not been doing very well for the last 2 to 3 years. And moreover, last week only somebody upgraded that stock, that shot up 10%. Otherwise, that would have been more than 10% down. So by looking at all this data, so what is the learning point? The learning point is very, very simple. When the market sentiment are bad, you stay with the defensives. When the market sentiment are good, stay with cyclicals. So that is the biggest message that I want to drive to you. But now, how to know market sentiment is bad? Do we need to say anything? Because the markets are falling from 26,300, kept on falling. Look at the FII data. right? Last September end, we reached a peak of 26,300. Then after that, market continued to fall. Look at, this is 1,14,000 crore. So FIIs have sold 1,14,000 crore in just 1 month. And that's why the market kept on falling. Then October falling, they sold. November also they sold. December also they sold. But the thing is, the selling was coming down. But what happened suddenly in January? Now selling is picking up. Today is January 11. Only 1/3 of January is gone. But still, FIIs have actually sold more than what they have sold in December. So we still have left with the 2/3 of January. You can imagine. So I will not be surprised if this figure is surpassed in January. So the things are looking very, very bad. Okay. So, in a nutshell, okay, definitely the sentiment is very, very bad. So FIIs continue to sell. Though FIIs continue to sell, but domestic institutions continue to buy, but there is no use. Right? You may remember my famous analogy earlier, FII and DII are two big rowdies. Retail people are the third big rowdy. Third big rowdy will always join hands with the first big rowdy. He will never join with second big rowdy. So retail people always join the hands with FIIs, not the DIIs. Right? But again, some other data, if I see, that's looking a bit disturbing. You look at this data, right? So if you see here, index net long position. Okay, so this is FII. Okay, so FII net long position is this is a zero line. So that means FII, it is a below zero line, means FIIs are short. Okay, so FIIs are keep on shorting. That's a red line. Okay, and then if your blue line is a Pro plus FII. Pro means like brokers trading in their own account. Pro account plus FII put together, also it keep on coming below the zero line. But the client means what? Retail people. Their long position keep on increasing. Right? So which shows that FIIs and prop account means they're the big people. So ultra Chennai clients, big people, and FIIs keep on shorting the market, but retail people keep on going long in the market. So that's also a disturbing trend, I would say. Oh, sorry. Okay, I did not show the chart. Okay, I'll show you now. Okay, so this is the data I was trying to show. So this is the red line is the FII. Short position is a below. This is zero. Below zero means they keep on shorting. Okay, so this is blue line is Pro plus FII. Also they keep on shorting. Client keep on taking a long position. So I forgot to switch on the camera mode. Okay, so the point here is that FIIs continue to short. FIIs continue to sell in cash market. Ultra HNI clients or prop accounts keep shorting the market. The market sentiment is really very, very bad. Okay, now the question is that what next? Okay, so that's a big question. Okay, so what are the possible things that can happen? Both positives and negatives. So both we will see. Okay, so first I will show you the chart. So this is the Nifty 50 chart. First I delete all these things. Okay, so this is the Nifty 50 chart. This is a day chart. Okay, first look at the Bank Nifty chart. Okay, now where the Bank Nifty closed yesterday, it is exactly where the Bank Nifty closed on 28th December 2023. So which means that, okay, whatever the gain has happened in the last 1 year, everything has been wiped out. So the Bank Nifty last 1 year return is zero. Right? So that is a kind of thing of course, it went down, it went up, and that's a different thing. So right now the Bank Nifty is trading where it was trading the last week of December 2023. So which means that 1 year of effort is completely gone. If anybody has invested, put the money in bank FD also, you would have got 7-8% return, but here you get a 0 return. So the bank Nifty is looking even more bad. Okay, now we look at the Nifty. Okay, now Nifty, I'll just give you a brief one. After making an all-time high, okay, after making an all-time high, the market came down by about 3,000 point, then recovered about 1,500 point. Okay, now again falling and testing this low. So this is the picture right now. Okay, now first let me talk about the positive. So to talk about the positive, so first I need to go back to very, very old, about 12 years before. Okay, so 12 years before means what? 2013. Okay, so let me go back to 2013. I tell you what actually happened in 2013. So this is 2013. This is 2013 to 2014. Okay, so here what has happened? Okay, so Nifty formed a high there. Okay, so it fell. Then after that what happened? About 50% it retraced. Okay, so again it fell, not this level only, also it came down even below that. Okay, so if you look at this point, so this is around 6,000, so this is about 5,200, so that's about 15-16% fall. So from the high about 15-16% fell. Okay, what actually happened on this day, that is 28th August 2013, okay, LIC felt that market is at very, very low, it's extremely oversold, so it is time to support the market in a big way. So domestic institutions have bought heavily, right? So there was a huge buying by LIC. So that turned the market around on that day. From the day's low, actually the Nifty shot up about 2-3%. What has happened after that? After that, that day's low has never been tested. So you can see after that so many years. So this day's low, it was 5,120 around. You can see that data here. 5,120, that 5,120 has never been visited. That's number one. Number two, this is the period where the rupee was hitting the low. So rupee kept on falling and the rupee was hitting a low. Okay, so that time, so when the rupee hit a low, the FIIs got panic, they continued to sell. So, market were extremely oversold, LIC entered, turned the story around, and after that Nifty has never tested that low. Now, if you see, more or less the same setup is happening here. Okay, now, number one, rupee keeps hitting the low. I think yesterday rupee closed, yesterday Nifty, I think Indian rupee closed above 86 rupees. Okay, so now what happened? Nifty formed a high, okay, then fell, then recovered, now falling, okay, and now rupees also keep hitting the low. So markets are extremely oversold. So LIC, if they think, or at least if the government tells the LIC to come and support the market, then probably if FIIs come and put a big buy order to turn the story around, so the markets can, take a support and can move higher. Even it can move higher than this during the next 2-3 months. Right. So, but will LIC come in? Will LIC thinking that this market is at the very, very extremely oversold, very, very bearish? By looking at the stock prices, that's what we feel like, so many stocks have fallen more than 30%, even in Nifty 50. Right? If you go to mid cap and small cap, there are so many stocks have fallen 50-60%. Right? So there is a possibility that market can recover. Okay, and either LIC will have to enter the market or some kind of a trigger must happen. I thought TCS results might become the trigger, but TCS result, only the IT stocks recovered, all other stocks came down. Okay, we will see the budget. So budget may be the next big trigger, or Infosys results, and then Reliance, and I think next Thursday, Infosys, Reliance, and Axis Bank. And all three companies will declare the results after the market offers. So that's going to be very, very important next week. So this is one, the bull case scenario. Okay. Now we forget about the bull case scenario. So now we'll talk about the bear case scenario. So what happens if the FIIs continue to sell, if the market continue to fall? So where is the next support? Okay. Now here I told you, when the market fell from this place to this place, 50% retraced. Then after that started falling. So usually in stock market, 50% Fibonacci retracement is considered to be a very, very good support or resistance. Now, if you take the longer picture, so longer picture means, this. Last year, September, October, the market fell. Somewhere around the end of the October, market bottomed out. And the market started moving higher. Then again, everybody thought BJP will lose in all the 5 states, but they won in 3 major states. And then Fed chairman also indicated cut in the interest rate in future. So then sentiment turned and the market completely moved higher. So the market that started around 19,000, it went up to 26,300. That's a very, very, very big rally. Now, if you take a Fibonacci retracement of the rally from here to here, okay, I think that I'll do it again because I'm not very good at this charting. From this place to correct, it has come exactly. So if you see this entire rally, when the market is falling, okay, so this will be the first support. Okay, so that was broken. This is a second support. In fact, this is only a very, very minor support. This is a good support. And see exactly after that, when the market started falling, this is where the market took support and retraced around 1,500 point. Again falling, now trading at this level. But I'm sure the way things are going next week, this level will be broken. So the next major support is only this one. So this is around 22,600. Right? So this chart I have to do it accurately, but I don't know how to do this accurately. So the next major support for Nifty is only around 22,500 to 22,600. So that is about 3% lower from the current level. If large cap Nifty falling 3 to 4%, then around 3%, then stocks can fall even 5 to 10%. And mid cap, small cap can fall even more. So this is the picture right now. So I've given you both bull case scenario and bear case scenario. So both scenarios I've given. We don't know which one is going to play out. Okay, but I wish LIC enter the market to stabilize the market. If LIC is not entering now, when are they going to enter? right? Or probably they're waiting for 22,500 to 22,600. There are many things, to look at the chart and to talk looks very, very simple, but the real pain is very, very high. Assume that somebody invested in the beginning of last year when the Nifty was around 22,000, 21,800 something. Now, if the market is coming to 22,500, that will be hardly 2% return for 2 years, right? So, that is 1% return per annum. Then what for we have to take so much risk to invest in stock market, right? So stock market should logically give better return than the FD return, right? So the messages I'm trying to give you: number one, the market sentiment is very bad. Time to be in defensives, not in cyclicals, and then more correction is possible up to 22,500 to 22,600. So keep all these things in mind. Hope you enjoyed watching this video. This is a very, very long video. I hope you enjoyed watching this video. Thank you for watching.